Thank you for inviting us to brief you on the roles and responsibilities in regard to the audit of the National Social Security Fund. Article 163, subsection 3 of the Constitution of the Republic of Uganda, 1995, as amended, and sections 13 and 1 of the National Audit Act, 2008, require the Auditor General to audit and report on the public accounts of Uganda and all public offices and report to Parliament. In addition, Section 23 of the National Audit Act 2008, as amended, states that the Auditor General may appoint private auditors to assist him or her in the performance of his or her functions under this Act. Over the years, I have exercised my mandate and appointed reputable international audit firms to undertake the financial audit of NSSF on my behalf. Types and scope of the audits undertaken by my office. Pursuant to my mandate, the Office of the Auditor General undertakes the following types of audits. Financial audit. This is an audit that examines the financial statements and the underlying records of an entity to give an independent opinion on whether the financial statements present a true and fair view of the financial position, financial performance, and the cash flows for the year in accordance with international financial reporting standards and any other regulatory framework. Value for money audits. This is the type of audit that assesses whether the entity resources have been economically, efficiently and effectively utilized to deliver services. Forensic and investigation audits. These are audits, investigations undertaken to gather actual evidence which is admissible in court. Compliance audits. These are audits carried out to assess whether entities are complying with the legal, statutory, policy, or regulatory requirements while delivering their mandates. These audits may include environmental audits, procurement audits, gender audits, and any other special audits. I now invite the Assistant Auditor General in charge of audit services to continue with the delegated submission. I thank you.
Honorable Chair and members, I'll continue on page 3 of 10 under paragraph 2.0, financial audit of NSSF. NSSF is established under Section 2 of the NSSF Act as amended to provide social security services to employees in Uganda. Section 32 of the NSSF Act as amended requires the Auditor General or an auditor appointed by him or her to carry out a financial audit of the accounts, including the balance sheet of the fund, not later than 6 months after the close of every financial year. As explained above, and in accordance with Article 163, subsection 3 of the Constitution of the Republic of Uganda, and as amplified by Section 13, subsection 1 of the National Audit Act 2008, I'm required to carry out a financial audit of the NSSF and report to Parliament and to those charged with governance. Accordingly, over the years, I have been appointing private auditors from reputable international firms to carry out the audits or the financial audits on my behalf. These firms include 1. PricewaterhouseCoopers. These have audited for the financial year 2020, 2021, and 2021, 2022. They are eligible for reappointment for the financial year 2022, 2023. Ernst & Young, these have audited for the financial year 2017, 2018, 2018, 2019, and 2019, 2020. KPMG have undertaken the audits for the financial years 2014, 2015, 2015, 2016, and 2016, 2017. Deloitte and Touche have undertaken the audits in the financial years of 2011, 2012, 2012, 2013, and 2013, 2014. As a control mechanism and in accordance with the office outsourcing policy, the audit firms are appointed on a rotational basis of 3 years, within which their performance is assessed on an annual basis before qualifying for reappointment. In addition, the private firms are supervised by my designated staff throughout the course of the audit process. Under paragraph 3.0, we have the summary of the key financial audit findings over the past 3 years. The first one is unallocated members' funds. Included in the accumulated members' fund account is unallocated members' contributions. I noted that the fund did not allocate the members' individual accounts a sum of 38.2 billion in 2020, 45 billion in 2021, and 57 billion in 2022 due to incomplete and errors in the members' records. The second item is the tax on tax, and we noted that Uganda Revenue Authority disallowed certain expenses relating to the years of income from 2005 to 2012 and raised the tax assessment of 42.2 billion. Currently, the fund is in courts of law over the matter with the URA. Lack of independent investment records. There were no independent investment records maintained by the fund for investments made by the fund manager. As a result, management could not compare their records to the custodian's reports and the fund manager's report to ensure completeness and accuracy of investments held and associated income recognized. Manual computation of interest income. The fund had not automated the process for the computation of the investment income given the volume of transactions involved to minimize the risk of human error arising from manual computations. The automation should take into consideration a direct interface to the financial reporting system with the relevant approval levels. Encroachment on the investment properties. The fund uses external independent property valuers to determine the fair values of the investment properties at the year end. During the field visits in the process of concluding their evaluation, the valuers noted that plot 1058 in Lubowa had been encroached by the local residents. Delayed resolution of customer complaints. There was delayed resolution of customer complaints, such as delays in processing claims. I advised management or the fund to ensure that customer complaints are resolved within a reasonable time frame and evidence of follow-up and resolution retained. Management should update the fund's policy to align the resolution time frame to the actual time taken to resolve specific categories of customer complaints. Lease title to the land acquired from Naro. It was observed that land that was transferred from Naro to NSSF during the year 2021 did not have a land title in the names of the fund. Management was still in the process of transferring the title. Management should ensure that it obtains the title to the land to avoid any matters that could arise out of failure to have a title deed, such as encroachment and legal battles. Under paragraph 4.0, we also did engineering audits, and below are our findings. In addition to the financial audits, engineering audit of Lubowa Housing Project, Phase 1. The objectives of the audit were: 1, to assess the adequacy of the project feasibility in relation to the integration of the project infrastructure into the existing infrastructure in the project area. Review and assess the preparedness for the disposal of the houses to be constructed. Review the procurement processes for the consultant and contractors and evaluate whether this was carried out in accordance with the relevant procurement guidelines. To evaluate the existence and effectiveness of the internal controls which are needed for sound contract management and engineering principles and practices. And 5, to obtain reasonable assurance that the certified and paid works were actually done to a reasonable quantity and quality in accordance with the specifications, sound engineering principles, practice, and technical management policies. Out of that audit, I noted the following: 1, conceptualization of the project. The audit established that the joint venture partnership proposed in 2004 with private companies to undertake the design, construction, development, and marketing of the houses had not been properly conceptualized. In 2010, management of NSSF resolved to exit the initially conceptualized joint venture basing on the following reasons. 1, one of the parties to the joint venture company was participating in sharing of profits from the sale of the houses, yet the land and capital belonged to NSSF alone. Precipitation of a conflict of interest whereby one of the parties in the joint venture company was both majority shareholder and also contractor for the project. One of the parties to the joint venture company was holding 51% of the shareholding, thus depriving NSSF of the significant shareholder rights and intrinsic value. The structure of payment terms during the construction was unfavorable, whereby 50% advance was to be paid to the contractor and a total of 80% at shell level, the balance on completion without any retention. The joint venture company was not being audited by the Auditor General due to lack of the appropriate legal provision. The old project structure stroke agreements were not approved by the Solicitor General. And 7, there was unnecessary and inefficient flow of project investment funds through the joint venture company and to the project end suppliers. Procurement of the works contractors. The best evaluated bidders cost for Lot 2, that is the construction of apartments and non-residential structures, was at 27.1%, lower than the engineer's estimate. As such, this could increase the risk of claims and variations requests from the contractor. Some items in the engineer's estimate had no quantities, that is to say, the quantities in the bidding documents were 0 and bidders were to provide a rate in brackets only. It was observed that the items whose quantities were 0 ought to have been known with certainty and therefore properly planned for. This omission may lead to high variations in the contract. Progress of the project. The overall physical progress of the project at the time of auditing in 2021 was determined at 75%, of which Lot 1 for the construction of bungalows was at 79%. Lot 2 for the construction of apartments and non-residential structures was at 91.1%. Lot 3 for the construction of townhouses and villas was at 60%, and Lot 4 for general infrastructure works was at 70%. Avoidable expenditures, a total of Uganda shillings 323 million and US dollars 293,000 was spent by the fund towards expenditure, which in my opinion could have been avoided with better planning as detailed below. 1. The sum of 323 million was paid to undertake the procurement of contractors for phase 1, and yet the fund has a fully fledged procurement and disposal unit. And in addition, the supervision consultancy contract provided for the participation of a consultant to provide for technical expertise during the evaluation of the bids. 2. A sum of US dollars 173,000 and US dollars 120,000 was paid to contractors of lots for lots 1 and 3 respectively as compensation claims relating to the renewal of performance and advance guarantees as a result of delayed issuance of instruction for commencement. Overpayment to contractors due to incorrect quantity verification. I undertook measurements on some selected items to establish the consistency with which the supervision team accurately measured the quantities before payment. An amount of US dollars 353,000 was noted as overpayment due to inaccurately undertaken quantity measurements. I advised management to recover these amounts from subsequent certificates and also make further checks on the already paid items. Integration of infrastructure into the existing infrastructure in the project area. I observed that the project infrastructure being implemented and existing infrastructure was not well planned. This was evidenced by 1. Absence of a traffic assessment study indicating how the proposed project housing traffic is likely to impact on the traffic on Entebbe, Kampala Highway and other major road networks as well as the surrounding road networks. 2. The end Riverside Road does not tie in well with the existing road leading to the site of Rubowa Hospital. The material at the end of the road is not well leveled. Thirdly, the intersection between the community road from Deja and Riverside Avenue at chainage 1+450 is a black spot and will be prone to accidents due to the fact that Deja Road is at a lower level compared to the field section along Riverside. Drivers from Deja can't see those from the either sides of the river of Riverside Vice and vice versa. Absence of a branding, marketing and sales strategy. There was no comprehensive strategy for branding, marketing and selling of the houses. Such a strategy would guide NSSF in the realization of the expected revenues and allow continuation of the next phase of the project. Status of the special audit or forensic audit of NSSF. The Office of the Auditor General was requested by the Minister of Gender, Labour and Social Development to undertake a special audit stroke forensic on NSSF regarding the alleged misconduct in the management of the fund. Arrangements are underway to commence on this assignment. Conclusion. Honorable Chairperson and members, I have come with copies of the reports which can further explain my findings, recommendations, including management explanations regarding the matters raised. I beg to submit. Thank you, Honorable.
The Auditor General has failed to capture. Namely, we have been meeting various stakeholders. There was an issue with the Temangalo land, where the title, even after we spent large sums of money, is still in the names of the individual we bought it from and not NSSF. The second would have been Workers' House, where the title still has a caveat, which was put there by Alcon, and I thought the Auditor General's Office should have noticed such an irregularity. The third was in 2019. There were 2 fraud instances at NSSF, one of 3.5 billion and another 150 million on the suspense account. And the Auditor General seems not to be aware of the said fraud incidences. The fourth, the occupancy rate of both the Workers' House and the Social Security House is 94%. But NSSF has managed to recover only rent of 70%. This means every month we have people defaulting over, on a conservative estimation, over 4 billion. And this is going to cause the saver losses because the saver is supposed to benefit from the interest and the investments. There's another issue, plot 1, Pellington Road, where the title disappeared. And I thought the Auditor General would have this information. Honorable members, do you have any questions?
Unallocated members' funds, and then later on you tell us lack of systems and complaints and manual computation of interest income and all that. We needed to hear from you, is there any system in place? Are the funds that you interrogated? How do you know this? I'm wondering whether that is in the report.
Honorable Gafabusa.
That we shall get probably the details in some of the audit reports that they have brought. However, I want to find out whether there has been a compliance audit on NSSF at any one time regarding issues of governance, compliance with the governance regulatory framework. If it is not in the copies that you are giving us, probably you can also throw some light, Auditor General.
Like Temangal and Workers' House. On page 5, on encroachment on investment properties, the fund uses external independent property valuers. What does the law say? What the purpose of the, why not the government value? Why do you only observe and you don't tell us what the fund should have used? We expect you to advise us on that. Either the approach of using external was the best when the government valuer is around. Now, when you come to page 7, Roman 1, I want you to elaborate more on this. One of the parties to the joint venture company was participating in sharing of the profits from the sales of the houses. Yet the land and capital belong to NSSF alone. Isn't that safety? And why don't you mention that company or that party in order to be clear? And if the party did not participate in say providing land, neither capital, how can it be regarded as a joint venture company? Then page 8. I don't know if it was deliberate by the Auditor General in order not to be straightforward or frank. When you say a total of Uganda shillings 323 million and US dollars 293 million, 293,655 56.48 was spent on the fund towards the expenditure, which in my opinion could have been avoided. Is that a loss to the fund? Straight away, why don't you state it that that's a loss, so that when we're counting the loss, we already know where some losses were made. Then, similar to page 9, on top, when you say an amount of US dollars 353,345.59 was noted as overpayment due to inaccuracy undertaken countermeasures, is that also not a loss? And who is responsible? Could the Auditor General elaborate more on that so that we know? Because we have been hearing on the TVs and from the people concerned, the fund safety is okay, the workers shouldn't worry, their money is safe, but already you are indicating where there is overpayments. Can we still trust those people that the fund is safe? I thank you.
The question is that I thought you would give me some comments as the person who was in charge of the audit of this firm. We have allegation of financial impropriety within NSSF. And I was expecting to hear some comments in as far as the projects taken by NSSF, Pension Tower, Luboa, and other real estates, confirming the allegation or refuting it about value for money. Do we have value for money for these projects? As if the person who went down and dig the real details of these projects, do we have value for money for these projects? We have also, we need your comments on the allegations of financial impropriety below. That there is a allegation of collusion with the contractors. We want to know whether it is true that the management of NSSF collides with the contractors. We have issues on MTN and Quality Chemical shares. We have serious questions on that project also. You would help us understand the details of the shares and how variable. Then the sale of a property in Mbarara. These are serious allegations that we need some good information from you. NSF plot of land at Bakuli and Luboa. Here it was sold at 5% commission. And the Temangalo. Earlier colleagues have talked about Temangalo, but there is this issue of Luboa and there was some 5% commission or kickback to the electors. We need your comment on this. Yes, I beg to submit from there.
The last paragraph. There was no independent investment records maintained by the fund for investment made by the fund manager. According to you, is it a requirement by the law so that we know if there was some provisions of the law that was not followed? And lastly, on page 5, Naro, it was observed that the land that was transferred from Naro to NSSF during 2021 did not have a land title. Was there any transfer of monies from NSSF to Naro, or it was free land from Naro to NSSF?
Honorable Masao.
Sure arose. So NSSF has the three, the fixed, the real estate, and the equity. Do you have audits on the equity? I think you can clarify on that, because that is where any issue is coming in, because you've talked about the audits in real estate. Then the fixed, I believe it's quite safe since that is government. So I want you to highlight on the equity as well in forms of shares elsewhere. Then you've talked about the manual computations, but I believe there was a project, the PASS, the Pension Administration System, which was valued at over $7 million. That is supposed to take care of most of these issues concerning inputting the data, payments, and all that. And I believe this was approved. So have you done an audit into this system as well? Because I believe there could be an issue there as well. Thirdly, it concerns, I think, forensic audits. Is this the first forensic audit you're doing in NSSF? And because the they requested for it, the Minister of Gender requested for it, or you've ever done any before. Perhaps you could talk about the pension tower as well, as my colleague has talked, the procurement of it, because you've talked about Lugoa alone, but I believe there was an issue raised by the whistleblower as well concerning that pension tower. Thank you.
Honorable
Honorable
Amos.
Chair.
The NSSF invested in cell pay machines, and they were supposed to be put in supermarkets like these payway machines for members to check their balances. However, this project failed and the machines were withdrawn and scrapped. I'm shocked that you did not take note of how much the saver lost. We also need you to tell us what is the extent of encroachment on plot, is it 1058 of Lugoa? Because you have talked about that plot being encroached upon. So what is the extent of the encroachment? Then we want you to also tell us are there any recurring issues in the various reports you have conducted, in the audits you have conducted? Are there issues that keep coming up? Honorable Kakembo, you had something?
Yeah, Honorable Chair, thank you. Alcon, the lawyers that have refused to return NSSF land title have allegations that Alcon is demanding 22 billion from NSSF, and that's the reason why they have refused to give NSS the land title. As the Auditor General, we expect you to dig deep into the dealings between Alcon and NSSF. There is this issue of serious political interference by the minister into the affairs of NSSF. I want a comment on that, as you, the person who went deeply down. What did you find about the relationship between the minister or the two ministries, the Minister of Gender and the Minister of Finance, into the affairs of NSSF and the impact in the direct administration of NSSF fund?
Lastly, Honorable Gaffa.
Thank you, Chair. Just, I know this is a summary of the findings, but I wanted the Auditor General also to tell us from the audits so far conducted, in summary, whether we've had any qualified audit on any of them, so that we probably can be able to look at that also. Are all the audits unqualified?
Chair, in your answering, when I was referring to the system that would report on failures and losses, I want to attach your answer to the pension administration system and whether you had an audit over its procurement to reflect on the cost in relation to also the smart card that the chair was referring to in his question. Thank you.
Kindly.
It is just highlights. It's a summary of the issues, and we have a lot of information in the detailed reports. Now, there are two levels of reporting. We issue the Auditor General's report to the Parliament, the Right Honourable Speaker of Parliament, but also we issue what we call management letters. The management letters have most of these issues which members have raised, and we are glad to share the detailed final management letters. And we're also glad to say, Chair, that we are accompanied by one of the firms which the Auditor General talked about when he delegates work. We have PricewaterhouseCoopers here, who are the most recent auditors, and they will be chipping in to give additional clarifications. So a lot of the information is either in the audit report, depending on the sensitivity of the issue, or it is within the management letters that we are glad to share with you. But more specifically, on the issues of land, for example, Temangalo land title. This is an issue that we raised and is there in our management letters. It may not appear in the final report because there was still a process of titling, and we captured the steps that management was taking within our management letters. The issue of occupancy rate, for example, the issue of collection of rent from the tenants. This is also an issue that is very clearly laid out in our management letters and the steps that we advised management to take, which include a court process so that funds are recovered. Then there was an issue of there were issues of unallocated members' funds, and this is one of the issues that are recurrent. Actually, they have been recurring in our audit reports. So what is expected to happen is that when employers, and that's companies and entities, pay for their employees the NSSF contributions, what they are supposed to do is to send a list of beneficiaries as they pay the amount to NSSF. But what we have been observing over the years was that a number of companies would pay the funds, would pay money without accompanying list of beneficiaries. Now, when that happens, then you cannot allocate the funds to the individuals. So we're telling NSSF that they needed to improve their system of ensuring that funds can be allocated. So when the funds are not allocated, then they are put in the suspense account. And that's why we've kept on raising this issue. But on raising it severally, management took certain steps and started demanding companies to accompany the payments with a list of beneficiaries. We, however, note that these figures have not significantly decreased. Instead, actually, we are seeing an increment, and this is a matter that is recurrent. Then, on a number of issues, actually, were concerning IT procurement over the pension management system and so on. We have very, very elaborate comments and observations on the IT management within the fund. What we therefore also need to note that when we raise these issues, some of them we do not put them in the final report for really technical reasons, because when you expose all the IT risks, then you also expose the entity to unscrupulous individuals out there who may take advantage. So what we do, we specifically outline them and indicate the risks and measures that should be taken, and we address them to management. And this is clearly outlined in our management letters. I thought I would make those initial comments, and then maybe my colleagues can come in, or if PwC, if you are ready to supplement.
Have an indication, just a figure, how much it costed the fund?
Our reports, and it's not in the summary that we have here, but we can certainly avail it at an appropriate time.
And we have a team, so. Auditor Generals, your officers organize themselves. Why do you keep hiring private auditors? Why do you keep outsourcing auditors from outside?
A resource constraint issue. If we had all the resources in terms of the budget and skill set, we do not, outsource these audits to private auditors. The job evaluation that the Auditor General undertook just last year indicated that for the Auditor General to cover the whole scope of the audits that he has to the expected quality, he would require a staff establishment of around 1,400. Currently, we are close to 600 staff. So, but this is an issue that we've raised with the Minister of Finance and Parliament, the Parliamentary Committee on Finance, and I think it is a matter that is being looked at. So, Chair, it is really a resource issue.
But don't you think hiring is more expensive than using your own auditors?
Yes, it is. It is certain. It is.
So what you are doing is not a cure, but you are also wasting taxpayers' resources.
I'm sure we would wish that you look into our request to Parliament to enhance our, our budget.
Let me ask it this way. In your budget, you have money to hire these private firms, not so? When you are making a budget for your department.
Honorable Chair, yes, we do have, but again, that money is not always adequate. What we normally do, particularly for state corporations have a provision, a budget provision in their budgets for audit services. So it is that item in their budgets that is used for audit purposes.
How much do you need for a fully fledged department at the Auditor General's office?
For a fully fledged department to undertake
all these activities per financial year?
No.
To hire, if you are to hire more staff, as you have requested, as you have just told us.
Chair, as I indicated earlier, we need around 1,400 staff, but currently we are 600.
Quantify that in terms of their salaries. How much do you need? Because you have been bringing this request, you have said, to Parliament and Finance.
Yes. Chair, we've made a request to Finance that the additional 600 to 700 staff that we require would need an additional 50 billion.
Per year?
Yeah, 50 billion, yes.
And how much do you pay Price Cooper? Is it Price Cooper?
Price Water?
Price Water, yes.
Yes, Price Water House Coopers. I think this year, how much the audit cost? 240 million.
240 million?
Yes.
Okay.
Does the law prohibit the Auditor General Department to belong to any of the external firms you hire? Is my question clear?
No, it's not clear.
Does the law prohibit any staff of the Auditor General's Department to belong to a professional external money firm?
No, I think you cannot work for both. You can either work for the Auditor General or...
It's just a yes or no, and we proceed.
I think the law does not allow that.
No, don't say I think. Say
The law does not.
The law section so does not allow
It
that.
does not allow.
Or otherwise, as
So
required,
once-
we may quote instances
So,
where some members of the external firms are paid by government within the auditor's department.
No.
Have you ever had such an instance?
No.
Kindly respond to those questions. We have run out of time.
Honorable Chair, you asked another reason is that NSSF invests its monies outside
Uganda, and in countries like Kenya, Rwanda, Tanzania. And it is so happens that in those associates, they believe in the Big Four audits carried out by the Big Fours to add a clout on their financial reports. So we also took that decision also to ensure that the fund is having that international outlook. Chair, the other honorable member also asked a question that with the IT solutions at the NSSF, why do we still have wrong computations of the income? And I think you mentioned about the pension information system, administration system. The pension administration system does not manage the investment. And what the query we are talking about is a solution for the investment revenue. But the pension management system or administration system is management of the claimants' payments. So we're actually advising that if they can get a similar system which can directly interface with their financial systems and other systems, such that also the revenue coming from the different investment sources are instantly also captured by the system without any human interface. I thank you, Chair.
Sorry, Chair, to intervene. I need clarification. I want you to relate it to unallocated member.
Loss, that's what I was telling you. Maybe depending on how you look at the reasons, they are here very clear. As explained.
Okay. I have quickly looked through your 2020 liquidity risks, asset risks, and in just about 3 words, is the money safe?
I think, first of all, I thank you very much, Honorable Chair, for that. There are 3 categories of investments at NSSF. One is in financial instruments, that's treasury bills and bonds, which is about 75%. And of course, all investments will have a risk, but treasury bills and bonds have the least risk. 2, the other category is equities, which is about 17 or 18%. That is the shares they have in Umeme, shares in Safaricom in Kenya, and so on, MTN. Then the other category is real estate, which is about 7%. So given that 75% or more is within the least risk investment, that's the financial instruments, I think it is really a matter for the committee to really determine whether it is safe or not. It's just that is the profile. It's the profile of the investment.
Yes, but quickly looked through your management letter, 2022, as of June 2022, and I have seen all the risks that you noted in your report. So I just want you to summarize for us, is the saver safe?
I think, Chair, the quick answer is through the work undertaken by the Auditor General, through PwC, nothing has come to his attention to indicate that workers' funds are not safe.
So should we ignore the risks you have put in this report?
The risks could be there, but I think I've not looked at that page now, but I think that page was trying to.
No, I've looked at the whole book. I perused through quickly. And this is your document, not mine.
With your permission, Mr. Chairman, just provide some context of the risk analysis in the report. Every enterprise, every organization faces risk because of the activities it undertakes. As we carry out the audit, we seek to address the risk of errors in the financial statements. And in so doing so, we then seek to identify what are the risks. And that is the context through which we report on the risks in that document for the benefit of management, of the board, but also of this house, which is the recipient finally of our reports. Therefore, in their own right, Mr. Chairman, if you'll agree, they cannot be taken on their own to be a basis for concluding whether money is safe or not. It is a matter of evaluating whether or not management has put in place measures to manage those risks, because that is their role. And therefore, that picture that you have here, perhaps, if one wanted to know what is the residual risk, that is something that management can provide through their risk management reporting, which they do to the board on a quarterly basis. And if you'll allow me, I can comment on a couple of other points that were raised.
Okay.
To join and transfer its scheme to NSSF. Okay, so it's entire assets, but at the same time assumed the liability to pay pensions to those members. Just land. There were other assets as well, and it wasn't just one piece of land, Mr. Chairman. So out of them, more than 540 acres, Chairman. I can get that for you in a second. I wanted to try and see if I can throw more light on the question of these unknown contributors, block figures from Mr. Bakabulint. I will give Mr. Cole some lessons. The background to this, Chairman, is that over the years, NSSF undertook drives to increase compliance. And they would identify employers and carry out audits or investigations to establish the number of employees for whom contributions have not been made. That process could go back a number of years. Inevitably, by the time those audits are concluded, some of the employees have already left. In fact, even by the time the audit starts, if it goes back, say, 5 years, some of the people that have worked for that company over that 5-year period would have left. And some of them, their new employment will be known, but in some cases it will not be known. However, NSSF is duty-bound to collect the contributions for those employees, but they will not have all the details to register them in the system as individuals. So that is where the challenge comes in. And I think that's what management now needs to find a solution for, because the companies are known, the periods are known, and some work could be done to try and get those people to come out, because it is their money that is held. It is earning a return, but it cannot be paid to them because the fund does not know who they are. That is the background to that issue, as Chairman.
I think you need to be in a worker for a long time. They've been getting statements. We normally help our workers. By the time they want to retire is when they come to discover that so many years or so much months, the company was not putting the 10%. Instead, the 5 was the only one coming. And then NSSF could not bother, yet they have their contact to tell them that your sheet or balance sheet or statement of the year, something is missing. Now, for you